Hi fellow traders, I'm making this video to share my fundamental as well as technical view on GBP USD. So before I discuss my technical views, let me talk about the fundamentals. So let's talk about what is good for GBP in recent environment, or what will be good for GBP in upcoming days. And then we'll talk about what will be bad for GBP in recent environment or in upcoming days. So good for GBP is that there is no anticipation that the United Kingdom will opt for extension of complete withdrawal period from the European Union. So there is chances that they will try their best to negotiate and finalize trade deal with European Union and completely move out of European Union within the withdrawal period. So this is the one good thing. Another thing is pound is already undervalued, so it should recover for sure in upcoming weeks or days. So these are the things which is in favor of GBP, and there is chances that GBP will soon be trading around 1.3. So these are the good things. But the bad thing is there is no progress on the negotiation between European Union and the United Kingdom for a fresh new trade deal. And the negotiation did not move forward since the outbreak of coronavirus in February this year. So this delay in the negotiation is bad for GBP in short term. Also, if I mean, it's unlikely, but if they opt for if they ask for extension of the withdrawal period, that will also be bad for GBP in short term. So now we'll look for technical setups, and then we'll look for what we can do in line with these fundamental views. So now you can see that we have a bearish Gartley on the chart, and a bearish Gartley is a reversal pattern. As I already said, that the long-term view, long-term fundamental view is saying that we may reach around 1.30 in GBP USD. So I'll not be anticipating a complete reversal and moving towards this price level. Rather, I can say that this Gartley is going to cause a short-term downward retracement, and the minimum target of a Gartley is 30% of the whole move. Here, this whole move is from point A to point D. So this 30% of AD is the whole move up, and this will be the short-term target for this bearish movement, and this is supported by the delay in negotiation for a trade deal between the European Union and the United Kingdom. So as there is a delay, that will support a little fall in pound. So this will be the destination. And but further, if we hear about the negotiation and the good outcome between the two I can say neither I can say country nor I can say continent. I mean, the European Union is a continent, whereas the UK is a country. So let me choose another thing. So the two entities. All right, let's. So if we hear some good negotiation news between the two entities, then definitely this uptrend will resume, because this CD leg was quite sustainable, and when D already is standing above the B, so definitely this ABCD can continue. Now right now this CD, the length of the CD is just 127.2% extension of the BC, which is making ABCD classical extension, where we do not consider the length of AB, rather we calculate the length of CD as per retracement BC. So D is at 127.2% of the BC, as well as D is at 78.6% retracement of the fall XA. So this is making mathematically good Gartley, because all these extension and retracement levels are correct and coinciding here at the point D. So this is a good Gartley. Market has already started going down, and this has made this engulfing bearish candle. Before this engulfing bearish candle, the price action of last few days was not very bullish, and it was already a kind of hanging man pattern, which is a bearish candle pattern. Then it made a very tiny real body with a long tail to the upside, which is something like a shooting star, again a bearish pattern, and then this engulfing candle, full body, and the closing below this previous candle, the closing below this hanging man. So this obviously is a very good bearish candle pattern. Today what we see yesterday, this one, and we already have this ABCD, this XABCD Gartley, or you can simply say classical ABCD. So right now technical setup is bearish, candle patterns are bearish. The minimum target of Gartley is this 30% of whole move from A to D is 30% of AD, and price is moving down. But we cannot take sell trade here. If we take sell trade here, we have to take a risk of kind of 258 or 270 pips, because definitely we are going to wait for price to go up and close above this point D to figure out that this trade didn't work. So if market goes to the upside and closes above D, then definitely we have to take loss and close the trade in the loss. So we have to risk here something around 270 pips, and the take profit will give you only 160 pips. So it's terribly bad risk reward ratio. Our reward will be quite less than the risk, so we cannot take any trade here. So rather we'll wait for price to come around this area. We do not know whether it will stop around 30%, maybe it will go further to the downside, but once it goes down and it stays or takes support around some significant Fibonacci level, and then it makes a bullish candle pattern on 4-hour time frame, we'll be seeking for further buy entry, and we'll be trading this AB equals CD pattern, where the target will be 1.32, but before 1.32 we'll have a round number, that is a psychological number, 1.3000. So we can set our next target for the buy trade around 1.3. So this is for the buy trade, but right now we'll have to look for opportunity if we can enter the sell trade. As I said that there is a delay in negotiation between European Union and the UK, so it can support the fall. So we'll have to wait for the retracement against this recent move down, and then we can take our entry. So I do not expect that market will go up and touch this 50%, because when market was in uptrend, the downswings, I mean the swings of opposite direction, were kind of 70 pips to 100 pips. It was 110 pip. This down move was 66 pips. This down move was 139 pips, but this has taken place when market was already overbought. Otherwise, when it was in uptrend without being overbought, downward move was not bigger than 100 pips. It was like 109, something between 70 and 100. It was like it was 100. This one was 93. This one was 74. So while market is going down, definitely the swings of opposite direction, I mean it will be moving something like, it will be doing zigzag. So the upward movement will be something similar, like something between 70 and 100 pips. So if we calculate our retracement from here to this area, this is already 30% retracement is already 77 pips, 38 is 100 pips, 50 is 132 pips, and it is less likely that the market will make an upswing of 132 pips, and then it will continue to the downside. So I'll rather take positions around 38.2 and 30%. So I'll take half of position here and half of the total whatever risk. Let's say you are going to take a risk of 5%, so 2.5% here and 2.5% here. You can adjust the lot size accordingly. From here we'll have a stop loss of I'm not going to place a stop loss. Obviously we will wait for the closing of daily candle above the last high to decide if we have to take the loss in the trade. So no stop loss, but yeah, even if we wait for the closing of the candle above this high, then our risk, this high is 181 pips far from this 30% retracement level. So 180 plus some 10-20 pips extra, roughly 200 pips will be your stop loss from here, and take profit will be 240 pips. So this is a good risk reward ratio. Our reward is 40 pips more. From this area 38.2, our risk will be 165 plus let's say 20 extra pips, so it will be 185 pips risk and 260 pips reward. So this also will be a very good trade. So you can simply set your sell limit here and then sell limit at 38.2, and then let's wait for execution. If it doesn't go and touch our sell limit, we will simply skip this opportunity of placing sell trade, and we will do not will not enter sell. Rather, we will wait for market to fall and complete the minimum target of the Gartley, and then we'll be looking for opportunity to buy with the target at 1.3, as I already stated on daily time frame. So that's all about GBP USD, and thank you for watching.